Hello, welcome to the Thursday trading session right here in Lagos, Nigeria. Here's what's coming up in the next 55 minutes. Nigeria's average daily crude oil production dropped 1.25 million barrels per day in May. And Kenyans have until August 31st to update their prepaid meters as part of a campaign to boost customers. And gold prices fall as the Fed projects just one rate cut in 2024. Hello, welcome to the show. I'm Ladi Williams. First off, let's get a check on the oil market now. Since investors are not getting their rate cut projections the way they wanted, we're seeing the impact on the markets now. $81.85 a barrel. This was seen for Brent this afternoon, 0.90% down. We see WTI also in the same direction there, 0.99% down. So at the end of the day, still what the Fed had to say yesterday about rate cuts. They've pushed that can further away in the year, so investors are kind of rattled at this time. Meanwhile, Nigeria's average daily crude oil production dropped to 1.25 million barrels per day in May. And that's according to the latest data from the Organization of Petroleum Exporting Countries. In its monthly oil market report, OPEC mentioned that the production data, which is based on direct communication with Nigerian authorities, represents 2.34% decline from the 1.28 million barrels per day output recorded in April. Despite the decline last month, OPEC says Nigeria retained its position as the largest oil producer in Africa, followed by Libya, which produced 901,000 barrels, Algeria with 264,000 barrels per day oil produced within the month. Also to other matters now, we see the metals market definitely also being hit by what we saw yesterday with the U.S. Fed with forward guidance about when they're going to get the first rate cut. So we see gold down 0.85%. It's a big drop right there for gold. Silver follows 2.80% drop, trading at $29.42 per ounce. Palladium's not left out, 1.35% drop, $899 per ounce, still below that $1,000 mark. That's for palladium. Well, another story is now with the value of new minimum wage still unsettled, even after President Tinubu had said that a wage bill will be presented to the National Assembly. The national president of the Association of Local Governments of Nigeria is asking that state governments consider a buffer for them. The national president of the association, who was a guest on Business Morning, is also asking the unions to be considerate in their demands. Take a listen.
Even I say, let the label agrees on this 62,000 naira, and then allow us, the local government councils, which glaringly cannot be able to pay the 62,000 naira, but we know where to run to. We were lucky, the chairman of the Governors Forum was there. So I said, as our principals will always run to you for one augmentation or the other, and we also run to the federal government when this is 2,000 naira or any amount to be agreed between the federal government or the government side, the organized private sector, and the labor, whatever amount agreed, we have, and it becomes, when it becomes law, it has been passed by National Assembly, enacted, then we have no reason not to comply with it. But in order not to run foul of law, we say we must go to our principal, that is the governors in this, on one side, and the federal government on the other side, to augment whatever will be accruing to local government councils in Nigeria from FAC.
And now to our first conversation. Well, it's been 25 years of unbroken democracy, and we've been taking stock so far. Today we'll be drilling down on the oil and gas industry as it relates to refining. Nigeria's been importing refined petroleum products for many years, and now there's hope of changing that narrative with the Dangote refinery and other modular refineries. But will Nigerians ever be able to buy PMS and not cringe when you see the cost? Well, join us now to find out more about that is Mr. Eche Idoko, Publicity Secretary of Crude Oil Refinery Owners Association of Nigeria. Joining me right here in the studio. It's great to have you, sir. Definitely quite interesting times.
Yeah.
25 years of democracy, and just about 2 years ago now, we've been talking about refining, our own oil, and definitely it's something to celebrate at this time. But even though we believe, or many quarters would believe, that as an oil-producing nation, at some point within that 25 years, we should have been refining our oil already.
Thank you for having me. Just by way of introduction, my name is Joseph Owolabi, CEO of Rubicola. But in terms of the refinery and in terms of what we're doing in that space, I think it's good to know that despite the world moving towards more green ways of energy, there's still a transition approach that needs to be had. And a country of 220 million people and difficulty in energy and energy insufficiency.
Right.
I think the way to go is definitely creating our own energy supplies, especially when you think about the fact that the Russia-Ukraine crisis have resulted in challenges in energy across the world, not just in Europe.
Right.
I think it's still the way to go for Nigeria from that point of view. Obviously, there are challenges around ESG and all of that, and I can come to that in a bit. But I think it's an important
definitely an important one, and definitely I got my guest a little bundle earlier. You are Joseph Owolabi, founder of Rubicola Consulting. It's great to have you, and definitely our conversation is about
valid.
green bond issuances, and definitely we know that it's not easy, pushing the green, mindset at this time, because Africa still relies heavily on oil.
Yep.
Looking at, refining and all that, we're trying to get to that level, in Nigeria this time. But talk to me now about green bond issuance. We've seen a big growth there with green bonds in 2023, about $135 billion.
Correct.
And about $1 trillion in for the green social sustainability and sustainability. That's GSS.
Yep.
And that's referred to. So talk to me about this growth we saw in 2023. What would you say drove this? Because when you look at the whole prospect of going green, it still looks like we're moving really, really slow.
Yeah, I think just to put it in terms of context, right? Green bonds are very similar to your typical bond, vanilla bonds. In this respect, the only difference is that the proceeds from the bonds are targeted towards reducing the impact of climate change. And so if you look at what Nigeria has done over the last few years, back in 2016, Nigerian government, the federal government of Nigeria, became the first country and government in Africa to issue a sovereign green bond. So, and if you look at that, that's a significant step. And what the proceeds of that was devoted to, afforestation, dealing with deforestation in some part of the north, rapid bus transits in Abuja, and solar, which obviously is the way to go. If you look at it, that last year alone, more than 30% of the total energy used in the world comes from solar. It shows that there is an enormous potential there, and places in the north, in Lagos, there's still abundance of sunshine, and there's a lot of capacity there in terms of what we can do. Looking at the uptake of green bonds, there's still a long way to go. Globally, you see that there are a few hundreds of billions of dollars being raised every year, but we know that there's still opportunities there for governments. The federal government has issued once or twice subsequently, but also state governments. Lagos State issued something last year. A number of the states can take this up because there's enough opportunities there. Because when we think about how do we attract the funds we need, right? In terms of foreign direct investment, investors all over the world usually oversubscribe green bonds. So when you think about extra budgetary allocation, all of the social services that government needs to do in terms of healthcare, in terms of dealing with flooding and all of these issues, green bonds or climate finance presents an opportunity to raise funds to address some of those challenges.
Right, and definitely talking about solar panels. When we had the whole Band A and Band D, we saw a lot of customers run to solar, because they couldn't afford to pay that, amount when it comes to electricity bills. So we're seeing that kind of like a plus.
Correct.
Pushing clean energy at this time. But, talk to me about these bonds really. What makes it attractive for investors?
So, if you take it back again to, many years ago, governments around the world have been gathering together, thinking about climate change. We know that climate change is an essential risk for this generation. Obviously, we've seen a lot of that here in Nigeria. We know what's happened with Lake Chad. We know what's happening in northeast in Nigeria in terms of terrorism. We've seen flood take over, not just Lagos, but even some of our neighboring countries in East Africa recently. Tanzania, Kenya, and other parts of East Africa has been engulfed in flooding and earthquakes around the world. So definitely climate change is real. What's driving this, though, is the fact that governments around the world, 195 governments around the world, during President Obama of the US in 2015, decided to come together, about 196 federal government heads of state, to agree on what their target reduction would be in terms of 2030 milestone, 2050 milestone. And to drive that, you need financing. So if you're thinking about curbing emissions, right, you need to think about things differently. Buildings have to be constructed differently, smarter engineering. Like you said, solar, we can't keep doing energy business as usual in terms of fossil fuel. And that's where solar comes in. Of course, in Nigeria, the price of energy is spiked in recent times.
Yeah, I've seen some bills on social media, and they don't look pretty.
It's insane, right?
All, yeah.
And if you think about the cost of living and standard of living, all of that, then it probably makes sense to go solar. However, there's still many challenges people have to deal with, right? The initial cost of acquiring solar and the batteries and the inverter.
Because I remember a time when, it was quite affordable.
Yep.
They were even begging people to take up these solar panels. But now, that has changed. And definitely, we know the currency devaluation is also playing a big part, with that.
Fantastic. Obviously, we need to start developing some of these things locally, right? If all of the parts, supply chain that make up a solar panel comes from China or other parts of the world, then all of the effects.
Even though I heard that China's been flooding the global market with cheap panels.
Yep.
But they're still expensive coming here.
Yeah, it's the exchange rate, right? You've pointed that out. It's the exchange rate. Obviously, when you flood the market with those kind of things, you also think about quality, right? So China can give you quality stuff, but also we know that, depending on how much you pay would determine the quality. And also there's challenges with disposing of all of this, right? So it's not just enough to get the batteries and the panels. How can you recycle that? That's been a challenge. And there's a lot of that on the internet already in terms of that constituting waste and, again, damaging the environment. So we need to be smarter engineering required so that you can recycle this and also make it cost efficient. In other parts of the world, like in France, in Australia, where I'm based, the government also provide incentive for people to acquire this panel. So that's probably an area where local government, state government, federal government needs to incentivize people to be able to acquire this going forward. All
right, so Mr. Owolabi, you're going to hold your thought there, and I'm going to introduce now Mr. Eche Edoko, Publicity Secretary, Crude Oil Refinery Owners Association of Nigeria, because at the end of the day, it's about clean energy, but Nigeria is looking at refining at this time, and definitely that means refining fossil fuels. So Mr. Eche Edoko joins me from our Abuja studio. Great to have you on the show. Good afternoon.
Thank you very much, Ladi.
So definitely, we're all talking about refining our oil now. That's talking about Nigeria. After 25 years of democracy, just about 2 years ago, we started thinking of really, refining. So talk to me about the prospect of getting cheap PMS, at this time, because we've heard some quarters say because you're refining doesn't mean you're going to get, PMS for cheap. What are you thinking about that?
Oh, thank you very much. Just initially at the intro, I thought I was going to come in. So let me just take a leap from where your guest in Lagos had started. I would want to really appreciate those who have put faith in the midstream and the refining segment of Nigeria. Particularly, I would want to thank the pioneers, late Dr. Arrett Adams and Dr. Lai Fatona, of the then Niger Delta refineries, now Aradel, who started with the 1,000 barrels per day topping plant, which, by the way, had grown to 11,000 barrels today. as we speak, and they are working on another 11,000 barrels hydroskimming plant that will be producing PMS. And to everybody who are foundation members of Quran, who have put faith in the refining segment, even with very little encouragement from the government and from the industry at the time. They faced daunting challenges from skepticisms by experts to lack of visible government structures and support, and they have weathered the storm. Today, we have Dangote, who is built a 650. We have Aradel, who is running an 11. We have Edo Refinery, who is running a 1,000. We have OPAC, who is running a 10,000. We have Walter Smith, particularly, who is also running a 5,000. And we have several others. We have a Cleargold, who is building a 20,000 hydroskimming, which will also run PMS. These are people who have put their faith, in refining in Nigeria. And interesting, people don't even know who these people are. A lot of them are experts who have served the country at various stages in the industry. Some of them are investment bankers who have come and seen the need and said, look, we can't continue like this. And they've thrown in their hats, putting in their savings and their investments. And today we see, like you have rightly pointed out, 2 years down the line, we are beginning to see refining activities within the private segment in Nigeria. So it's interesting. And then to your question, yes, I do remember we granted an interview in one of the media houses recently where we did say, and we stand by it, that if we begin in-house refining, if we begin local refining, we will see a significant drop in the price of PMS, pump price of PMS, if we begin to refine PMS. And we have a lot of indicators that would buttress our point. For instance, when Dangote began refining diesel in large scale, we saw diesel dropping from almost 2,000 naira per liter to 1,200, and it could have still gone down. We are saying that just from simple analysis, in bringing in 1,000 liters of PMS, that's about 1,000 metric tons, it will cost you about $150 to $200 in freighting. Now, when you refine in country, you are going to knock off that price alone. And then when you are using modern refining technology through the modular refineries, let's say you're using a hydroskimming plant, you can cut the cost of refining a liter of a barrel of crude to as less as $5. Now, these are costs that you are going to cut off, and it will directly, reflect on the pump price at the filling station. So yes, right, with refining, we are going to get a significant drop in what the pump price is right now.
Okay, can you put a figure to that possible significant drop?
Okay, so this is tricky. This is tricky because it's a matter of metrics. Is a matter of figure out that the costs are there, and these are not fixed. They change per time. But I can tell you that from what I have said, if you add to it, like if you have a barrel of crude, for instance, you can produce 80 liters of PMS. Then if you cut off the cost of refining, you cut off the cost of freighting, it can come down. But it will be difficult for me to give you an actual figure now. But within a range, we can have something within the range of 500 to it can even come as low as 300, which was what we have said in the other interview. But then, like I said, it will be misleading to attach a fixed figure to how much PMS can come, because a lot of other factors apart from this determine. FX issues are still a major factor, which we haven't gotten around. The cost of crude itself in the market, it's a major factor. And your guest in the Lagos studio did mention the conflicts, because the conflicts in most of the freighting routes right now, all this coming to affect whatsoever the final cost would be. But what we can tell you is that if we are refining our PMS in country, we are going to, experience significant drop in whatsoever the pump price is right now.
You did mention, FX issues that could pose, a risk to getting this significant drop, in PMS prices. But what about oil production? Is that posing any risk at all to having lower PMS prices?
Yeah, well, it will. We would need to improve our production. And to be fair to the NUPRC and the government, a lot has gone into ramping up our production. These things are not rocket science. They won't happen immediately. We are foreseeing that in the next 24 months, 18 months, we are likely to see an increase in our output. Some of the assets that were recently divested, we'll begin to see them produce. So we hope that would come in. So there are efforts already towards improving the volumes that our output, as it were. But what we haven't seen significantly is efforts towards, empowering the local refining, which is a major factor. You can only get as much from your crude production when you enhance your domestic refining capacity. When we sell, we're still doing the same thing, the same old way. I won't get a different result. The game changer for us will be when we ramp up our production, we would also have ramped up our refining capacity. It is then that will begin to reap the benefit of even increased production.
Okay, thank you for that, Mr. Dokubo. Let me bring it to Mr. Awolabi right here with me in the Lagos studio. So definitely we're ramping up plans now. Everyone wants, cheap PMS, at this time. I want cheap PMS. I don't like how much I pay to fill up my tank, at this time. But, talk to me about how all of this is playing into, this prospects for green bonds, in Nigeria, because at the end of the day, there's a risk that we might not really pay attention to, transition at this time. We're trying to refine. What do you think?
I think like every growing economy, if you look at Southeast Asia and South Asia, where you've got millions of people, Malaysia, Pakistan, Sri Lanka, there's challenges with growth, right? And so Nigeria being 220 million people or what have you, it means we need energy. And so I think it's just transitioning, understanding that yes, we need to reduce emission from a climate perspective, but we also need to power the growth. And we've seen that done in places like India, just going all in, and China over the last 40 years. Nigeria needs to do the same. However, definitely with energy and fossil fuel coming from places like Dangote Refinery, there's a place for that because we need to power our growth in manufacturing, which we still can do. However, we also need to start thinking about innovative ways to leapfrog. So we're in the fourth industrial revolution. How do we catch up with other economies around the world? And it's going to be in the space of technology, digital solutions. And we're doing that already. There are quite a number of unicorns that have come out of Nigeria in the fintech space. But there's a lot we can do. We can also look for smarter ways, in terms of, we talked about the solar technology, but also in terms of carbon markets. That's a new one coming up on board. How do we ensure that we don't miss out on this while we're still focused on fossil fuel? So the way to go in terms of cheaper PMS, I don't know if that would happen around the world. It's becoming even challenging. We're seeing the geopolitical tensions have a role to play in pricing of fuel, of diesel, and all of that. And that's not going to stop, right? We've seen in recent times also China flexing its muscles in the Southeast Asia space. You don't know what's going to happen with China and some of those markets. We've seen Australia, UK, and US with the AUKUS deal. We've also seen recent times Cuba and Russia and all of that, what it means for the North American corridor. So it looks like, when you ask economists around the world, next decade, there's going to be all of this volatility in geopolitical tension. So I think it's reasonable to expect that there will still be further increase in the global price of oil. And that's why for us as a country, we need to diversify our energy base. It's good to have Dangote refineries, but like we've pointed out, we need to start thinking of modular refineries, which is happening already. But more importantly, how do you empower households where you can generate you're self-sufficient? Most of the energy, the fossil fuel, the diesel that come out is used to power generators. in individual homes. We don't need that. If people have solar panels, which government can subsidize, then it means at least you can take care of your immediate needs, right? It's now left to the industry, industrial sector to now, depend on all of that. So I think there's a lot of opportunities as well as challenges, but if we work together and we have the appropriate policy, then we can meet the demand of the time.
Make the demand of the time. All right, let me take this to Mr. Edoko in our Abuja studio. Definitely, Mr. Olabi did mention subsidies for solar panels and cleaner energy. What are you seeing for subsidy payments on PMS, going forward with all of these refineries coming online?
Okay, so in the oil and gas segment, the conversation on subsidy, I think, has been overflowed. We have always maintained that wherever you have a subsidy regime, it can be a ground for breeding fraud, like we have seen in time past. Where we would encourage the government to cut down on subsidy and completely eradicate subsidy in the area of petroleum products sales. We are in another breath saying that the government ought to create an enabling environment, because if you are removing subsidy, you must create something that can cushion the effect of subsidy. And we say rather than throw money at the problem, you should create a sustainable structure. And what is that sustainable structure? You must have an initiative, you must have a program that can ensure energy sufficiency for you, and that's to grow your domestic refining capacity. And that's been the message, that's been the thrust of the message of Koran since we came in. We've been saying, look, we want to sit down with you, government, let's etch out a strategy to make Nigeria self-sufficient in product refining. And government will have to look this way. You can't keep pampering the boys that import. You can't keep pampering these boys. You can't keep spending your effects, on people who do not want to improve your economy, because that's what an average product importer does to you. And so we're saying, while we may not emphasize subsidizing this product, importation of this product, we can, in a way, find a structure where we can encourage domestic refining.
All right, thank you so much. We'll have to leave it there now, Mr. H.A. Doko, Publicity Secretary, Crude Oil Refinery Owners Association of Nigeria. That's Koran. Thank you so much for coming on the show today. And also, right here in the Lagos studio, Mr. Joseph Wolabi, founder, Rubicola Consulting. It was great having your perspective today.
Thank you so much. Yep, I appreciate it.
All right, we'll take a break now. When we come back, we head straight to the markets to find out what's going on right there and in the global markets we track. That's in a moment. Just stay with us. All right, now let's head straight to the markets now. We have Anete added with the details. Great to have you, Anete. So, I did say I was expecting some kind of surprise from the U.S. Fed on their interest rate decision, but I guess there was not much of a surprise.
Yes, and you're not alone in that expectation, because all around the world, it was reported that, unsurprisingly, the U.S. Fed Reserve didn't make any changes to the Federal Reserve's to its interest rates, which is currently at a 23-year high,
right.
Still maintained at about 5.25 and 5%, that in between that range. So, but at the same time, markets also close in positive territory, particularly across the Asia region, because of course the US.
And now, when you look at forward guidance from the U.S. Fed, definitely we don't know when we're going to get that cut. This year, if at all, is going to happen, but maybe next year. But that wouldn't be so bad for markets, I think.
And at the same time, the markets, particularly the U.S. Fed, had said it was expecting that it would cut interest rate about 2 times, which is the cost of borrowing, but about 3 times to be precise. But now it's been reduced to just about 1 time, and that's maybe in between October and November. The time is not specific.
Who knows if that's even
because they've shifted it all the way from March to April, and then to July and to September. So the waiting game just continues.
It continues at this point.
So, but for now, let's talk about our markets across the African region first, starting first where charity begins at home, which is our slogan here. 0.02% at intraday for Nigeria's stock market, the all-share index of the Nigerian exchange, and still oscillating in between 99,000 points. The market was closed yesterday in observance of Nigeria's Democracy Day, and before that, the market had made a 0.16% pullback, which in Naira terms translates to about 92.32 billion Naira. And of course, we've had 7 trading days so far in the month of June. Today will be the 8th day of trading within the month, but so far the market is still in positive territory for year-to-date at 33.2% and 0.3% positive for that market. Now let's move over to other sides of the market. We see South Africa 0.51% in the red, and then the other sides of the market for the Egyptian Stock Exchange and Kenya all in the green. Intraday 0.94% for Egypt, EGX 30, and for Kenya 0.10% for Tuesday's close. For the Kenya's NSE index. Now, let's talk about the fixed income market. Well, all the markets, not just financial markets, are resuming after the Democracy Day, which was we had 2 trading days before that. That was on Monday and Tuesday, and then now for the fixed income market, we see there was a quiet trading for bonds, and then for the Treasury bills, it settled with bullish sentiment, where we saw some interest there. But now there is currently a primary market auction being carried out by the Central Bank of Nigeria. But for the closer details about that, let's talk to Bosun Obembe, fixed income dealer at Access Bank, for details of that. Thank you for joining us, Bosun.
Good afternoon, Andy. Thank you for having me.
Okay. Now, I know that currently the central bank is conducting its primary market auction. This is the second one for June, and is expected to roll over about 44.23 billion naira worth of maturities. Now, can you give us details about this, and how is the market performing at intraday?
So the fixed income market is trading on the quiet mode, given this auction that is happening, given the amount that is on offer, which is less than 50 billion, like you mentioned. We have just about 44 billion maturing. So the expectation is the DMO will oversell at this auction, and we expect that the stop rate should decline slightly below the last auction close at the 1 year close at 20.67. So we expect that the rate will close lower.
Sorry, Bosun, I don't know if you can hear me. Okay, we seem to be having a bit of a technical issues with Bosun's connection, but he was talking about the primary market auction, which currently the CBN is conducting a rollover with the PME, the second PME, the primary market auction of about 44.23 billion naira. But still talking about that market, last week they said that the DMO, on behalf of the DMO and the central bank, they had offered to participants instruments worth about 221.13 billion naira, which comprise about 14.42 billion naira for the 91-day tenor, 26.82 billion naira for the 182-day tenor, and 179.89 billion naira for the 365-day bill of the PMA conducted last week. But now we'll be, if Bosun can join us later, we would have more details about that, the primary market auction being carried out by the Central Bank of Nigeria at the moment. Now, from there, let's move over to the Middle Eastern market, where we see at intraday, the markets, Saudi Arabia as well as the United Arab Emirates, we saw some profit taking, the impact of profit taking toll on the markets there, 0.61% for the Abu Dhabi index at 8,875.85 points, while the Dubai FM, which is still on the United Arab Emirates, down by 0.2% at 3,000, almost about 4,000 points. Now, over to the Saudi Arabia's market, the region's biggest market, was a gain there, 0.05% at intraday, while the Qatari Stock Exchange was up by 0.9%. So we see a mixture of bargain hunting and profit taking on the Middle Eastern markets. And from there to the United States of America, where we see myself and Ladi were talking about that, the impact of the U.S. Interest rate decision, where they held it at a 23-year high of 5.25% and 5.5%. Now, at the same time, we also saw the inflation numbers coming out. It slowed at about 3.3% versus 3.4%, which was recorded in April. Now, which shows that inflation is indeed easing. and which is one of the reasons why the U.S. Fed is slowing down or not in a haste to cut interest rate or even hike the interest rate, which would be rather on the surprise side. So, but for the S&P 500, it was 0.05% in the green, and for the Nasdaq, 0.54%, about 0.5% for that market. Now, the U.S. Federal Reserve has signaled that it will cut interest rate just once this year, despite some inflation easing. Back in March, the central bank had expected to reduce the borrowing costs 3 times by the end of this year, but that I don't think is coming anytime soon. So that's it for that market. And next, last on the top of our radar, we have the Asia markets, which are also tracking U.S. The announcement by the U.S. Federal Reserve's Chairman Jerome Powell that the country, they voted to hold that interest rate unchanged. Now, for the Nikkei, we see a pullback there. The number is still oscillating in between 39,000 and 38,000 points. But for the close of Thursday's trading session, it's down by 0.4%. Kospi was the biggest gainer for the region there, 0.98% at 2,754.89 points. And that's the third straight day of gains for that market. For the Hang Seng Index, where we see Hong Kong, we see a 0.97% increase there. We saw that vehicle stocks, the EV stocks, were the ones that pushed the gains there. And this is coming despite the European Union slapping a tariff of about 38% on Chinese EV makers, the likes of BYD and the rest of them. Now, for the other side of the market, we see Shanghai Index in the red, 0.28%, while Australia's ASX 200 up 0.44% for Thursday. So, Ladi, that's it for the markets.
Right. All markets watching the U.S. Fed, at this time, and forward guidance, definitely watching out for the minutes from this last meeting to also get more into the mind of the U.S. Fed at this time. Thank you so much, Nate, for the details there and most of the markets we track. Let's take it on to Europe now. Days after the EU election, and with some wondering what the future will hold for the 27-member bloc, Brussels has hit China with import tariffs on electric cars. Well, Lars Holter joins us now from Berlin. Great to have you, Lars. So what can you tell us about this move?
Thanks for having me, Ladi. Well, it didn't come as a total surprise, to be honest. Those tariffs have been discussed for a while, and they come only weeks after the US has also levied import tariffs on Chinese-made electric vehicles. Now, the US has put those tariffs at 100%, and the EU is going with 38.9%, so almost 40%. But the exact number is probably just a minor detail here. Both the EU and the US have long warned China and said that Beijing has to stop subsidizing its auto manufacturers in what was clearly an effort to artificially strengthen those companies and allow them to sell their cars at a much cheaper price than the competition within China, but also, of course, abroad. Now, China, of course, has a totally different view in the matter. A spokesman for Beijing's foreign ministry accused the EU of using the issue of subsidies as an excuse to engage in protectionism. And they're saying that by levying these import tariffs on Chinese cars, it is actually the European Union that violates the principles of a free market economy and international trade rules. Beijing also warns that all this, quote, will ultimately undermine Europe's own interests.
And what is Beijing talking about there? Will this come back to bite the Europeans?
Yes, it probably will to a certain point. China might indeed enact counter tariffs, maybe against European-made cars or maybe against products in other sectors. In the past, we've seen tariffs levied on German cars, on Italian cheese, French cognac, Irish whiskey, and so on. This is just another round of a game we've seen playing out for years. The classic tit for tat, where one country levies tariffs against another country, and then that country hits back with counter tariffs. Sometimes this game has been played between the US and China, sometimes the EU and China. But at the heart of the problem is, of course, that China's trading partners can't just allow Beijing to break free market rules non-stop and just get away with it. Beijing might accuse the Europeans of protectionism, but that's ludicrous. It is very well known, and it's also proven that China is heavily subsidizing its industry to flood global markets with all sorts of products at bottom barrel prices. There have been a number of studies looking into this, and they all agree that Beijing invests tens of billions of dollars that way. Detailed numbers, however, are hard to come by, and that's because there's just so many ways to subsidize a company, including by giving them access to raw materials at artificially low prices, or maybe by offering preferential treatment in lending, or by assisting with real estate, with land and construction when a company needs to expand.
All right, so what are investors looking at in today's market?
Well, I'd say yesterday's Fed decision will still play a bit of a role in European markets. It was after trading here that the Fed once again left interest rates untouched. The committee says there might only be one interest rate cut this year after all. And just a few weeks ago, of course, markets had priced in several cuts. However, now there wasn't too much of a market reaction in the US, and I'm not seeing much here either. We're also looking at what happens at Tesla today. The company has its annual meeting, and the most interesting point on the agenda will be whether shareholders approve Elon Musk's absolutely outrageous pay package worth $56 billion. It looks like it will be approved. However, there is a court challenge about it too. So we'll have to see how much he ends up getting. But it's definitely a story people are watching. It might just be the most obvious example of the preposterous greed we're seeing sometimes in corporate America.
All eyes on Elon at this time. Thank you so much, Alas Halter, for the details in Europe there. All right, let's take on other stories now. See, Africa's debt grew an average of 30% as a ratio of GDP in 2010 to over 60% currently, while most developed countries have a debt-to-GDP ratio of less than 40%. A recent report titled A World of Debt, published by United Nations Conference on Trade and Development, shows that rich countries and organizations that were previously sending grants to Africa as official development assistance have now reported to lending instead of worsening the debt crisis that African countries face. And Zimbabwe's ferrochrome miners, the nation's biggest electricity consumers, have agreed to build their own power plants over the next 2 years as the government seeks to balance energy demand. Under the agreement, ferrochrome producers will, in the meantime, pay electricity tariffs that are a little more than half the rate charged to other mining countries. And Kenyans have until August 31st to update their prepaid meters as part of a campaign by Kenya Power targeting 7.4 million customers. The update is part of an ongoing global exercise that targets all prepaid meters that use the standard transfer specification STS, a universal method to transfer tokens to prepaid meters while ensuring the security of prepaid generated tokens. So another conversation now, let's look at aluminium. In April 2024, the price of aluminium surged by 15.61% to over $2,600 per ton. The EIU is forecasting that global aluminium prices will decline to about $2,425 per ton in 2024. Joining us now is Halima Didirom, analyst at FDC. Great to have you on the show.
Good afternoon. Thanks for having me.
So we're seeing this forecast by EIU that global prices will drop, but domestic prices for aluminium products have increased. Why is there this discrepancy between the price movement right here and the global trend?
Okay, so firstly, aluminium is the third most abundant element in the earth crust after silicon and oxygen. And for the price movement in the global space, we have several factors, which is number one, commodity, number two, which is the premium, and number three, which is the conversion. That is the price of the commodity in the London Metal Exchange determines a lot the price of the commodity. Not only that, we also have the premium, which is the differential between the global price and the regional price. And thirdly, which is so important, is the cost of milling this commodity to usable products. And aside that, we still have in Nigeria the depreciation of our naira, which is really affecting the cost of importing this commodity to the country, because whenever there's depreciation, our imports will be very high compared to other regions in the world. And so this has really affected the trend the commodity when compared to the global space. And apart from that, in April 2024, we see that US and UK, they sanctioned Russia, which is one of the largest producers of aluminium. And this has really reduced the supply in that space too, which pushed up the price. Before, we are now seeing a gradual decline because of pressure when it comes to environmental friendly practice in China, which is one of the largest producers as well. So there's a shift in terms of usage and production in China, which is making the demand reduced in that space. So the demand and supply dynamics is really affecting the global price, while the exchange rate is affecting the domestic price of aluminium.
Right, and we know most of the products here are imported. Do you think there's an investment opportunity for local producers here?
Okay, also, well, we have it in abundance here. We can at least produce about 2.2 million tons based on what we have, but it is not only important to have it in abundance. What are the other things that would boost the production locally? Number one is the production of aluminium is energy intensive. To produce about 1 ton, we need about 17,000 megawatts per hour. So the question is, do we have that? If we have it, is it cost effective for us to produce? For instance, in Mozambique, which is also a good producer of this aluminium, what is being done that helped the production is PPP, that is the producer kind of initiative whereby the private sector and the public sector comes together, and they really made a huge production in terms of aluminium in Mozambique. But if we look at South Africa, which is also a producer, it has been affected by power outage, which is drastically affecting their production at the moment. So we need to look into what are the factors, apart from being naturally endowed, what are the factors? Electricity, how can we tackle it, and how we can really make use of, because the aluminium is a very vital element which has interrelationship in different sectors of the country, which can really bring about growth in Nigeria as a whole.
Okay, definitely a lot to unpack. Thank you so much, Halima Dedirosh. She's an analyst with Financial Derivatives Company. Thank you.
Thank you for having me.
All right, let's get a check on the crypto market. Let's see the sentiment in the market now. Definitely, we know it's still a greedy market, about 58 points. No, it's actually neutral, at this point, moving away from greed. So it's officially no longer greedy. Yeah, the crypto market at this time, 58 points over 100. That's what we have according to Fear Greed Index. That tells you how investors are feeling in the market at that particular time. All right, so it's all about what the U.S. Fed is doing with interest rates and when that cut is going to actually come. Let's bring in Rume Dominic now. He's Deputy Managing Director at Aviator Industries and also the founder of Vorum. Great to have you, Rume.
Thank you for having me, Ladi. I'm grateful.
Yeah, so definitely every market is reacting right now to what the U.S. Fed did with interest rates yesterday. But more importantly, it's about forward guidance. When is that rate cut going to come? Nobody knows at this point. It's been pushed down, the year so far. So talk to me about how crypto investors are taking this information from the U.S. Fed.
The latest decision by the Federal Reserve to hold this rate steady and project fewer cuts in 2024 have truly had a mixed impact in the market, and a lot of investors were disappointed by the lack of a rate cut, while others were relieved that the Fed did not signal a more aggressive tightening path. Overall, the market reaction was muted.
And what do you think is going to happen? Because I keep trying to imagine when we get that first cut, from the U.S. Fed, what is going to happen to Bitcoin?
Like I said, the reaction currently is mixed. However, Bitcoin will not be subjected to frivolous reasons or things that like this for it to be able to have its impact or its price action movement. We've seen recently the Bitcoin ETF that has happened. We've also seen a number of institutional investors that have come into the space, coupled with the Bitcoin halving that has already come. And then the cycle of the Bitcoin and blockchain cryptocurrency market we are currently in, which is the cycle of the halving and the peak. So it will definitely continue to go up regardless of this media disturbance.
Quite interesting, calling the media disturbance there. But a lot is happening on Telegram at this time. You see people, keep tapping. So much technology, happening right there, and it is related, with cryptocurrency. Talk to me about the opportunities that are in that Ton coin and that Telegram ecosystem right now with this whole tapping going on.
There is a massive opportunity that has grown with the gaming industry, and so innovatively has been added to the Telegram ecosystem, where you have a lot of users and a lot of Nigerians also active on that particular platform. We've seen with the likes of Notecoin, with the likes of Hamster Combat, that there has been some money that have been made from games like this that involves a lot of tapping on Telegram. I mean, some people were trending recently in Nigeria that they made over 9 million and a couple of other amounts that they claim that they made from getting involved with cryptocurrencies like Notecoin and the Hamster, just like as I have said. It is important to note now that this new game, which is called Pixelverse, right, is currently being hosted on that same Telegram platform, and they raised $5.5 million from their investors, which also included Circle and a couple of the other big investors in the cryptocurrency ecospace. The game allows users to earn crypto by playing this game, which means that users can do it through that messaging app. And over 15 million people have played this game in less than a month. So a lot of them don't really understand the concept or what is happening. They just see that their friends have made money from it and they want to continue, so they just want to engage in it. However, truly, if you pick the right cryptocurrency project that is currently doing such a tap to earn activity on Telegram, you will definitely be making money from it.
Quite interesting. I'm sure gamers would love this kind of time where you can actually play games, and earn money. But thank you so much. It was really great having your perspective, roommate Dominic, DMD Aviat Industries and founder at Vorum. Thank you.
I'm grateful. Thank you for having me.
All right, so that's how most of the markets we track are looking right here in Lagos, Nigeria, also in the global market. Thank you so much for watching. You can also visit www.channelcv.com for more updates. From me and the team right here at Channels HQ, it's bye for now.